Hello. Most losing trades are because we have flawed thinking patterns, and we want to believe they are correct so we can follow them. If we disregard emotions, our brains are like machines. When programmed with the right mindset, our actions will also be correct. Conversely, if programmed with a distorted mindset, our actions will also be distorted. Back when I was in university, my major was information technology, so logical thinking was deeply ingrained in me. And luckily, it helped me, if not the main factor, in helping me make profits in this market. When I first started trading, I was just like you guys, losing a lot of money. Then I started learning online and in books. The problem is that 80% of people in the market lose money, so I wondered if that knowledge was really useful. However, at that time, I didn't know because everything was new and interesting to me. I researched and tried all kinds of indicators on websites, tried all kinds of trading methods, even learned about EAs, also known as robots, to trade. But in the end, none of them worked, and I still lost money as usual. But suddenly I thought, if we ignore all technical analysis and enter a trade randomly without any analysis, for example, and buy once, there will be two scenarios. First, the price will go up and we will make a profit. Second, the price will go down, meaning we will lose money. Then I set a risk-reward ratio, for example, 100 USD. Winning is also done with that risk-reward ratio, which is 100 USD. So at this point, my probability of winning is 50%. The other possibility is that the price could go up. TP is going down, stop loss, station. Yet we still enter the market. We've all gone through phases where accounts are wiped out in just a few days or a few hours. The main reason lies in the emotions. When we win very little, but when we lose a lot.
When we first enter the market, we often do this. For example, we buy Bitcoin at 70K. When the price goes down to 60K, we hold on. And if we cut our losses, we'll suddenly lose 10K. But we decide not to cut. After a few days of holding on to the losing position, we get very scared and continue holding. A few days later, the price starts to rise again. And as soon as it's a little bit positive, a few $100, $200 or $300, then we cut immediately. Because at that point, we know we can make a few $100 a day. Each time we make a little profit, we close the trades and take that profit. And each time we make a loss, we don't cut and pray. We pray that the price will just break even so we can cut immediately. And in the end, it breaks even or makes a small profit. After many such instances, we make a few $100 a day. It feels simple. That's it. So we happily went along with it, making a little profit and then cutting our losses. Then one time, while we were holding on to our losses, the price went down and never came back, and our account was wiped out.
If you know how to set stop loss and take profit properly, then for 1 week, try placing trades randomly, without analysis, without looking at the chart. You will realize that even if you don't make much profit, you also won't lose much, because at that point, you have a 50% win rate in the long run. Even if there are losing streaks, it doesn't matter. There will also be winning streaks. Eventually, the result will move toward break-even, since your win rate is 50%, even though you are entering randomly without using any method or analysis. Thinking this way gives you a sense of safety and confidence. At least you won't blow your account anymore. When I started focusing on how to increase that 50%, the first thing I realized was that I needed to understand how the market truly operates. I spent a lot of time studying charts on my own. In my mind, I kept asking questions about the core nature of things. Why does price move? Why does it move the way it does? Why does it go up? Why does it go down? How are indicators like Ichimoku or MACD calculated? Why does their formula suggest buying or selling? Does price truly move according to those formulas? Each time I answered one of those questions, I realized more and more that the market does not move randomly. Everything is connected and follows a certain logic. Gradually, I wrote down what I discovered and called it the bull-bear law, because that name clearly reflects the true nature of the market and constantly reminds me to trade in harmony with its natural behavior. However, understanding how the market works is one thing. Being able to trade it successfully is another. At least this understanding helped me in one important way. Whenever someone introduced a new trading method, I could quickly look through its rules and know whether it had potential or not. If it didn't align with the true nature of the market, then it definitely wouldn't be effective. From understanding how the market works, I began experimenting and developing entry rules with higher probability. Then I wrote them down into a standardized, rule-based system. However, that system was still only a hypothesis. It had not yet been verified. So I spent time backtesting it on historical charts, collecting statistics and reviewing past data. Through this process, I understood the market even more, removed ineffective rules, optimized and added new effective ones to improve the win rate. This cycle of testing, correcting, refining, and improving repeated over and over again. Only through that process does your skill level truly increase. In fact, this method can be applied to learning any skill in life. Once I had a solid system, I returned to probability theory. The financial market is like a giant casino. Every decision we make is either correct or incorrect. What we don't know is the outcome. What we can control is whether our decision has a higher probability of being correct based on our preparation. The better prepared we are, the higher the probability of being right. In games like Sickbo or Dice, if you bet $1, you win $1 if you're right and lose $1 if you're wrong. You have a 50% chance of winning and 50% chance of losing. So over 100 bets, ignoring the house edge, you win 50 times, plus $50, you lose 50 times, minus $50. Eventually, as the number of bets increases, the result approaches break-even. However, professional traders don't play like that. They identify high-probability entries through a trading method. More importantly, instead of risking 1 to win 1, they risk 1 to win 2, 3, 4, or even more. They control risk using stop-loss, so they know exactly how much they are willing to lose. They control reward using take-profit, so they know how much they aim to gain. For example, after analysis, I enter a trade. My stop-loss risks $100, 1R. My take-profit is $200, 2R. If my win rate is only 40%, then out of 100 trades, 40 wins times $200 is $8,000. 60 losses times $100 is $6,000. Net profit is plus $2,000. That equals plus 20R, even though the win rate is only 40%. That is the mindset of risk management. At that moment, I felt like I had a powerful weapon, a strong entry system combined with proper risk management. It felt like holding a legendary sword. I was extremely confident. But ironically, when I was most confident, I was also the most careless. When I entered the real battlefield of the market, I still got destroyed. Eventually, I realized something. If a person lacks mental strength and discipline, no matter how good the system is, they cannot execute it properly. When the market scares them, they abandon their system. They close trades too early. They enter and exit randomly without rules. Of course they lose. What I was missing was trading psychology. It took me a long time to improve that. Fortunately, whenever I truly want to improve something, I find optimized and practical ways to train it. And the key is always practice. There is nothing I'm afraid to learn. I can even train myself to do unusual skills simply because I refuse to believe something is impossible. Many things we think are impossible are actually achievable if we persist in practicing the right way. But persistence alone is not enough. If you are persistent on the wrong path, you are only reinforcing bad habits,
And once bad habits are deeply ingrained, they are extremely difficult to fix. So persistence must be combined with the right direction. For anyone reading this, whether you are new or experienced but still unprofitable, don't worry. Believe this: there is nothing impossible in trading.
If you found this video helpful, please subscribe so you don't miss the next sharing.